I have updated the weighted average, uh, to include this. I had to make a bunch of changes, obviously, because of everything going online, as far as what columns were included in the weighted average. And I had to, anyway, it doesn't matter all of the background that y'all are doing, but your weighted average grade should be what grade you have now based on what's been completed to date. Okay. So nobody's talking to me. So how are y'all doing?
I just come in, so I skip on the past you talk.
Well, we were
What did you
just
talk?
talking about the exam. You know how I went through every question in every, every question in every exam for me to. That's how I came up with the adjustments on the exam. So I'm just saying that the weighted average grade in your grade book is your current grade based on everything that's been completed to date, except for data analytics 4. I did have time to grade data analytics 3 last night, but data analytics 4 I didn't, because it was almost 11 o'clock before I got that done, because I did spend quite a bit of time going through the exams yesterday. So that's where we are on that.
What about the extra credit that you said you're going to give us for attending the Zoom meeting?
Right. Well, I mean, that's something that, you won't see posted until the end. I can print out a report from Zoom as to, who was in, and obviously the polling questions. So I'm going to create an Excel worksheet that keeps track of it. Now, how many extra credit points it's going to be, I don't know at this point. I can't, I mean, I can't say that, I've got to decide. It gets complicated math-wise because I've got everything with different weights. So do I add the extra credit point to a particular category, or do I add the extra credit points just to your total grade, to your total weighted average grade? And so that's what I am working on. Obviously, it's going to help you, but unless I can think of a way to keep it posted and then keep it updated, say at the end of every week based on the classes that you attended, that might be difficult to do. I'm working on how I can mathematically get it up there and the way that it's going to do to benefit you the best, but without giving grades away. I mean, I don't want it to have enough impact where it could change you from, a C to an A, so I have to be careful about that. Wouldn't that be great? The other thing before we get into chapter 8 is I want to make sure that you all understand the SU policy that has gone out. Yes, I do. That is one of the things, I'm sorry, that I talked about. Tanisha asked about the ASC project. Yeah, I'm going to get that. It will be uploaded tonight or tomorrow. It has been at the top of my list for a while. And I keep thinking that I want to rewrite one that I've done in previous semesters. And now I'm just going to upload one that I gave, a couple of semesters ago. And it will be self-explanatory. So I will get the ASC uploaded. You should usually on the first ASC project, students do really well because it is one exposing you to the codification and where you learn how the codification is organized and how you navigate the codification. So the first one is just introducing you to the codification project itself. So I will get that uploaded. I apologize. This transition, I know it's been hard on all of us. And this has been taking our office supply door, that being open bothers me in the back. So it's taking a lot, a lot of work on the back. Anyway, I'm settling in now. Let me get caught up on everything. I will get the ASC out and we'll give you a week to do it. It shouldn't take you more than an hour to complete the project. So, but I just wanted to give you plenty of time to upload it. To prepare it. And then if you have questions, be able to have a class period between when I assign it and when it is due, that we have a class period that if you have questions about the codification in general, we could handle them in class. Okay, so that is the ASC. And me not feeling well Friday, Saturday, Sunday, Monday, and kind of just starting to feel better on Tuesday put me behind, because I did some things, but I just wasn't able to put as much time into getting like the ASC assignment done. So I apologize for that. We're just in different times right now, and I don't want to keep blaming that on it, but all right. So the SU policy, I want to make sure that y'all understand the SU policy, not only for this class, but for all accounting majors. You have to earn a C or better in this class in order to move on to accounting 420. Okay. So if in order to get a satisfactory, you need to have a C or better in the class in order to get a satisfactory. You need to think about your strategies there, because if you're going to get any, you just have to look at, if you're around that C, if your grade is a C, you have to look at your GPA to determine whether you want to take the C, which will impact your GPA, or whether you want to choose the SU. The S would give you credit for the course, and you would be able to move on to accounting 420, because the registrar's office knows that if you earned an S, then that means that you had a C or better. So, you could choose the SU and still move on to 420. So you have to think about what impact it would have on your grade point average, okay? Now, if accounting majors, if you have earned a D or an F, and you will know your grade before you have to, I'm looking at an email that we had gotten from the provost, and we have to have, they want us to post our grades on Blackboard and not report them to the registrar's office by May 10th. So that by May 10th, you will see your grade on Blackboard. That grade is not the one that is not being submitted to the registrar, so that y'all have May 11th is the deadline for you to determine whether you want a letter grade or whether you want the SU. You should have seen that in an email. So you need to make the decision by May 11th. So May 10th, I will have your letter grade post, on Blackboard. You look at it, then you have to let the university know whether you're doing the letter grade or the SU. Accounting majors, you know, obviously if you have an A, you're going to want your letter grade, A or AB. If you have a B and that helps your GPA, then choose the B. I think y'all can figure this out. But if you have a C and you don't want the C impacting your GPA, then choose the SU and you would be able to move on to accounting 420. All right. Accounting majors, if you earn a D, I highly recommend that you take the SU. Because if you earn a D as an accounting major, you cannot move on to accounting 420. If you take the SU instead of the letter grade, you will get a U, which means you will not get credit for the course because it would be like it's an F. But the U doesn't impact your GPA. So you would be able to repeat the course under grade forgiveness because you earned a U, but that U didn't impact your GPA. I don't even know if I would take it under grade forgiveness. You have 3 grade forgivenesses that you can do. You can talk with your advisor about this. If you're nowhere close to the, taking 3 classes over for grade forgiveness, then do it under grade forgiveness and change the U to whatever grade that you earn when you retake the class. Obviously, if you're earning an F, you're going to want to take the SU option. Finance majors. Finance majors have a decision to make because finance majors, in order to get credit for the course, need a D in order to get credit for the course. And obviously that would impact your GPA. If you take the SU, if you earn a D, you're going to get a U and you will not get credit for the course because finance majors are taking this as their finance elective, which is the smart thing to do. I know at intermediate's a tough class, but this is information and materials that you need to be a finance major. Anyway, if you earn a D and you want credit for the class, then you need to take the D and it's just going to hit your GPA. Because if you choose the U, you will not get credit for the course. Ashley asked about, what about accounting minors? Yeah, accounting minors, you can, if you have a D, you can take the the S. No. If you're an accounting minor, if you earn a U, you will not get credit for the class. Accounting minors, unless you're going to be taking accounting 420, if you're not going to be taking accounting 420 and you want to get credit for the class, even with a D, then just like the finance majors, you're going to have to take the letter grade. Because if you get a U, you will not get credit for the course. Ashley, did that answer your question? Whoever was doing the asking about the accounting minor. Yeah, the accounting minor.
It did. Thank you.
All right, so I just want you understanding, obviously this applies to all of your classes, just not accounting 320, but because of the C or better for accounting majors to move on to 420, I wanted you to, I wanted to make sure that you clearly understood what the policies, what the policies are. Okay. All right, so that was that on the SU. In Chapter 8, we are learning about inventory. And we're going to go over, I am going to be sharing my screen with y'all. And instead of writing some stuff on the blackboard, what I'm going to do is I'm going to pull up a Word document. And I'm going to be word processing on the Word document notes that are important, that may not be in, they're in the textbook, but maybe not as succinctly written as I am going to do. And then we will be talking about it. So you will be seeing my share screen. You will hear me talking about what we are, you'll hear my voice. I will be able to hear you if you have any questions while we're going through it. So we see that, you know, to record purchases. So that we have the gross and net, just like we did for sales. All right. So we can do gross and net journal entries when we are doing purchasing of inventory. We're going to cover that today. We're also going to do LIFO and FIFO, calculations of LIFO and FIFO. The thing that is different about LIFO and FIFO in intermediate from what you learned in principles is that in principles, to calculate ending inventory and cost of goods sold and gross profit under LIFO and FIFO, they use the periodic method. We're going to be using the perpetual method. The only thing periodic that we're going to be using in Chapter 8 is the weighted average. We can use the weighted average of our cost per unit to determine ending inventory and cost of goods sold, and thus gross profit under LIFO, FIFO, weighted average, and of course, specific identification. With respect to weighted average, we're going to use the periodic weighted average. We will talk about the difference between the periodic weighted average and the perpetual when we're working that. With respect to LIFO and FIFO, you will only be doing perpetual. Now, the other place in the textbook where they talk about periodic and perpetual is not only with your cost flow determination, meaning LIFO and FIFO, but also with the journal entries. I wish they had the periodic method with journal entries as an appendix, because it is because of computers, companies use the perpetual method. So the journal entries that we will be learning is only perpetual method journal entries, not periodic journal entries. So only perpetual journal entries. So let me get into, I'm gonna go into a Word document and I'm gonna just go over basic concepts that we need to utilize in Chapter 8. So before we get into a problem I've uploaded in Blackboard, I uploaded this morning a problem that we're going to work in class today. Okay, so you will have to pull that problem up and as we work it in class today. But first, let me go over some basic concepts. I'm going to open up a Word document, and it's going to be a blank Word document. And I am going to now go into share my screen, and you should see a blank Word document. Okay, all right. The first thing that I want to do is, before we get into the concept behind LIFO and FIFO, I want to remind you about this, that the schedule of goods available for sale that you learned in Accounting 203, just as a reminder. So we know that beginning inventory plus net purchases equals cost of goods available for sale. Okay, so when we have beginning inventory, and I will define net purchases in just a minute. So logically, if you think about the inventory that we had on hand, say that our fiscal year end is a calendar year end. So we have beginning inventory at January 1st. And inventory is made up of the number of units times my cost per unit. So with respect to inventory, we have to know what the quantity of the units are that I have. And then we need to know, how do I cost out that quantity? Okay, and again, this is where we get into LIFO, FIFO, and weighted average. Okay, so then we have net purchases. Again, we'll define net purchases momentarily, equals cost of goods available for sale. Now, at the end of the year, the inventory that is available for sale is either the company still has the inventory or it is gone. Those are the only two options that we have. You know, I had my beginning inventory, I purchased inventory this year. So what was the total amount that was available for sale? What was the total amount available for sale? Of the amount that was available for sale, the company either still has it, still has the inventory, and if the company still has the inventory, where would it be reported on the financial statements? So if I still have the inventory at the end of the year, where would that be reported on the financial statements? Well, what would it be?
Ending inventory.
Perfect, Ratone, good. So it would be ending inventory, obviously reported on the balance sheet. Okay. Now, if the inventory is gone, whether look, my iPhone will auto-correct to crazy stuff. My Word isn't auto-correcting properly. So if it is gone, whether the inventory, whether it was sold, lost, damaged, or stolen, will be reported as what on what financial statement? So if my inventory is gone, remember we capitalize inventory, and then when it is gone, when it is used in the production of revenue, what does it become?
Cost of goods sold.
Good, Katone, cost of goods sold. So it would be reported as cost of goods sold, which we call COGS, on the income statement. Okay? So in other words, if I take ending inventory and added cost of goods sold to it, what would it equal?
Cost of goods available for sale.
Nice job, Jacqueline. It would equal cost of goods available for sale. Okay, it will equal cost of goods available for sale. Now, the reason for going through this conceptual is one, reminding you about how cost of goods available for sale is, but we will also use this concept or just mathematical reality is that ending inventory plus cost of goods sold equals cost of goods available for sale. So if I take, didn't want to do that. If I take cost of goods available for sale and I subtract ending inventory, then what does that equal?
Cost of goods sold.
Good, that will equal COGS. Okay, and we are going to be utilizing this concept in order to calculate ending inventory, cost of goods sold, and gross profit under FIFO perpetual, LIFO perpetual, or weighted average periodic. Okay. I find that when we are doing our cost flow, whether we're using LIFO, FIFO, or weighted average, it is much easier. It is much easier to calculate ending inventory and then subtract ending inventory from cost of goods available. I am just having a terrible time with available sale. From cost of goods available for sale in order to get the cost of goods sold number. Okay. So as we're going through these problems, notice that we're going to be calculating, once we do our cost of goods available for sale schedule. So first prepare your cost of goods available for sale schedule. Second, calculate ending inventory. And then third, subtract ending inventory from your cost of goods So subtract ending inventory from cost of goods available for sale, and that will equal your COGS. So that are the steps that we will go through for calculating LIFO, FIFO, and weighted average. This is a much simpler process than actually calculating cost of goods sold, as we go along. So that is the basic concept is, calculate your ending inventory, subtract it from your goods available for sale, and then you end up with cost of goods sold. Okay. Now let's define net purchases. Net purchases is going to obviously equal the purchases that I have during the year. And these will be recorded at gross or net. With respect to inventory, what is the cost that are capitalized for inventory are all the costs necessary to get the asset ready for its intended use. You're going to have the same concept in other capitalized assets. Okay, what costs are included? The cost that the company has to incur in order to get the asset ready for its intended use. Okay, so we've got our purchases that we're going to be recording either at gross or net. And then we will add to that number freight in. And freight in is if I have to pay the freight to get my inventory into my warehouse, then that increases the cost of my inventory. It doesn't increase the number of units that I have on hand, but it does increase my cost per unit. Okay. Then we would subtract, this wants to do that as but it's all right. We will subtract any purchase returns. We will subtract any purchase returns that we have. And this is gross or net. If you use the net method for purchases, you're going to have to use the net method for purchase returns. Obviously, if you use the gross method for purchases, you're going to have to use the gross method for purchase returns. We would also subtract purchase discounts. And we're going to see that we only have purchase discounts we only have this with the gross method. We will talk about what happens with purchase discounts under the net method when we're going through the journal entries on gross versus net. But so companies still take the purchase discounts, but how we apply the cost or the reduction of cost for purchase discounts under the net method is different. Let's see what we would have. If we don't deal with this a lot, but just like we had sales allowances, we can have purchase allowances. And this would be gross or net. Remember, the purchase allowances are if we're a customer and we buy enough from them that we are given a 10% discount from the list price if the company wants to keep track of their purchases allowances. They can have a they can put it in purchase allowances, either as gross or net, if they don't want to include it in the journal entry when they actually record the purchase itself. Okay. And this would equal net purchases. So when I take my purchases plus my freight, because that is one of the costs that we have to incur in order to get the asset ready for its intended use. Obviously, I need to get the inventory into my warehouse so that I can sell it. So we would have to include freight as an increase in cost. So that is the definition of net purchases that is used here. Okay, any questions so far? Concepts that I want you understanding as we move along. Before we get into LIFO or FIFO, I want to pull up the problem where we are working journal entries in gross or net. Pull up the problem that you have in Blackboard. Do you see does it say chapter 8 inventory in-class problem? Okay.
Yes.
Let me save this. Okay, so I'm going to stop sharing the screen for a minute. And what we're going to be pulling up.
It's chapter 8, inventory Excel homework.
Let me go into Blackboard. All right, in-course content information. Yeah, the very first one after solutions. Do you see chapter 8 in-class problem? It's called chapter 8 inventory Excel homework version 14 is the file name. Do you see it, Ms. Pham? Okay, I'm gonna come back to, well, I guess y'all still see me. All right, does everybody have the problem? Ms. Pham, did you find it?
Yeah, I.
Oh, okay, I'm sorry, I thought you were still looking for it. So I'm going to bring up this problem, and I am going to go into Excel. And I'm going to work the problem in Excel. Again, I'm going to be share screening with y'all in Excel so that you can see how the calculations are done. Oh, Lord, where's my... Oh, here it is. Okay, so I'm going to go into share screen. And we're going to do the journal entries. You can see that this is a problem that I've written for myself and that I wrote myself because we have parties or us. And the company was purchasing beads for the Gasparilla parade. And they had to return some of the beads because they came in as purple, green, and gold, which are the colors of Mardi Gras, not Gasparilla. Y'all can tell I have a pet peeve with this, right? That they throw Mardi Gras beads at Gasparilla. So they have to return some cases of beads because they were the wrong color. And we're going to work this, the instructions say to work this under the net method. You can tell by the title that this was, when I wrote my own Excel homework problems, this was an Excel homework problem that the students had to do. We can also work this under the gross method, okay? So we will use the same problem to work the gross method and the net method. One of the things when we get into this that I want you to pay attention to is, remember, inventory is a function of two things: the number of units that I have times unit cost. So some of the economic activities that Parties R Us has on this problem will affect both the number of units and the cost, and some will affect just the cost, such as freight in. Okay. So let me go ahead and pull up an Excel file. And I am going to go into share screen, and I've got a blank Excel file. I am not going to, do y'all want me to split screen it with the problem up? Would that help you, or do you have the problem up? If you have the problem up, can you still see me share the screen? Wait, let me do this.
Yeah.
So do I need to share screen or not?
No, we can like minimize your screen and have the problem up as well.
Okay, so y'all do that because I've got a hard copy of the problem. All right, so one of the things that I am going to do is, because I need to keep track of what my cost per unit is, I am going to set up, so let's do the gross method first. So we'll do the gross method first. And I am going to keep track of the number of units. And this will make sense as to why I am keeping track of this in just a minute. And my cost.
Can you zoom your Excel page?
Total cost.
Can you zoom your Excel page?
Pardon me?
Can you zoom the Excel page?
Oh,
zoom
I'm not
in?
sharing it?
No, zoom it and it's a little small.
Oh, gotcha. Yeah. Is that better?
Yeah, it is.
Okay. All right, so the gross method, and I'm gonna be keeping track of the number of units and the cost, and then of course we'll get total cost. Now in the textbook, the information that you read about the gross method and the net method, look on page 411. Look on page 411 where it compares the gross method and the net method. Do you want me to work the problem in gross method all the way through, or do you want me to do the gross method for each economic activity date, each journal entry date? Do you want me to do the gross and the net for like January 2nd? Or do you want to work gross all the way through and then net all the way through? Which would be less confusing or more beneficial, however way you want to look at it?
I would do gross all the way through and then net all the way through.
Okay. Can I get some shaking heads? Because although I'm sharing screen, I can still see y'all's faces. Okay. So on January 2nd, I'm going to come down here and I'm going to, we're going to have the date. Well, let me, we'll just have the account. No, I'm going to include the date. Sorry about this. I want to insert a column. Why can't I insert a column?
It's in home.
Pardon me?
It's in home, not insert.
Thank you.
Yeah.
Um,
And then
oh, y'all can see all your faces. What is, all right, where am I? Katona?
You get it right.
it's good, bad,
Right.
over there to the right of it.
Pardon me?
On the ribbon, you see where it says normal, neutral, bad, good. It's to the right. Insert.
Oh my gosh.
I think if you
Oh,
just
yeah, right here.
And then hit insert to the right.
Insert.
There it is.
Now, how did I know I wanted to insert a column instead of a row? Okay, so I'm going to, sorry about that. I'm going to insert the date, and then we will have the account title and our debit and our credit. Okay, so the first one that we have is
Yeah. Wake up.
Ms. Pham, we can hear you talking to
sorry.
whomever. Is January 2nd. And on January 2nd, we purchased 5,000 cases of beads for the upcoming parade. And so I'm going to probably insert some rows here. So on January 2nd, we purchased 5,000 cases, 5,000 cases at a cost of $65 per case. Lisa. At $65 per case. And the total cost is $325,000. It's $325,000. Okay. So I am going to debit. Will you tell me, what is my journal entry? So we purchased 5,000 cases at $65 a case. So what is my journal entry?
Debit inventory.
Okay, good. I'm going to debit what account? What did we get?
We got
Inventory.
inventory.
Oh, good, we got inventory. Come on, we got inventory, which is an asset. And we purchased it on account, and look at the terms. The terms are 115 net 30. So the discount that I am allowed to take is 1%. Okay, so I'm allowed to take a 1% discount if I pay within 15 days. Otherwise, I have to pay within 45 days. Under the gross method, just like under the gross method when we did sales, you would record it at the amount before you take into consideration the discount. So the account that I would credit is
Accounts payable.
Good. Accounts payable. Okay. So right now I've got 5,000 units at $65 a case in my inventory. Now on January 5th, we paid the freight bill. So January 5th, we paid the freight bill. If I paid the freight bill, does that mean that it was shipped FOB destination or FOB shipping point? So I am the buyer, right? When we're purchasing inventory, we're the buyer. So if the buyer pays the freight, was it shipped FOB shipping point or FOB destination?
Shipping.
Good, FOB shipping point. It is very important that you understand the terms FOB shipping point and FOB destination. FOB shipping point means that the seller got the goods to the shipping, and the transfer of control happened at the shipping point. So while the goods are in transit, who owns the inventory if it was shipped FOB shipping point?
The buyer.
Good, the buyer. Okay, this is very important because when we get into understanding what inventory should be included in ending inventory, we have to remember that any goods, that any inventory that is in transit at our fiscal year end date and it was shipped FOB shipping point, we must include it in our ending inventory. Okay. If it is FOB destination, who pays the freight?
Seller.
Good, the seller. And who would own the goods while it is in transit?
Seller.
The seller. Okay. We're going to tackle inventory errors, which is a concept that's going to require some critical thinking, and it also requires that you understand the terms FOB shipping point and FOB destination. So in this one, because the buyer paid the freight, we know that it was shipped FOB shipping point. So what journal entry would I do for the $550? So what cost has to be capitalized for inventory? All cost what? We just said it. So what costs are capitalized into inventory? All cost necessary to get the asset ready for its intended use, right? So all costs necessary to get the asset ready for its intended use. Well, the intended use is to get it and put it on our shelves so that we can sell it. So obviously freight is a capitalized cost for inventory. So I would debit inventory. And since it said that we paid for it, I would credit cash. Now let's look at the impact that this journal entry had. Did I get any more units of inventory into my warehouse?
No.
No. But did it increase? So that's a 0. Man. Just trying to calculate, there we go. And my total cost is 550. My total cost is 550. So now I've got 5,000 units available for sale, but now my cost is 325,550. So you see how that freight has increased my cost per unit. Okay. Now on January 6th, we returned 50 cases because they were the wrong color. They were purple, green, and gold. And so we returned the 50 cases. So January 6th, I returned 50 cases. This is, I want to go into format my cells. I want them to be accounting, decimal places. I think, unless I do custom, and I think custom is that. Let's see what happened. Yeah. All right. So, because I just wanted for me to have brackets. Okay. So I returned 50 cases. Obviously, that is at $65. And my total cost would be minus $32.50. Okay, which is the 50 minus 50 times the 65. So what would my journal entry be to record So what would my journal entry be? I don't want my split to be here. What would my journal entry be to record the return?
Debit accounts payable.
Okay, good. We're going to debit accounts payable because we owe them less. And what account would I credit?
Inventory.
Inventory, nice. For the $32.50. Okay, we have dollar signs. We don't normally have dollar signs because I'm doing cell referencing in our journal entries, but that's okay. I'll get rid of them. Okay, so we're reducing the amount that we owe and reducing our inventory. Now I've got Leighton asked about sales returns. Leighton, we are in where we're the buyer, not the seller. You only have sales returns when you're the selling of inventory. Here in chapters 8 and 9, which are both about inventory, we're the buyer, we're the purchaser of inventory. So we don't have sales of inventory. Okay, all right, good, you got that one. All right, so now let's take a look at January 13th. On January 13th, I pay for my inventory. Is it within the discount period? So I purchased it on January 2nd. And it is 11 days later. Did I pay within the discount period?
Yes.
Yes, because it was 115 net 45. So I paid within the 15 days and I'm able to take the 1% discount. So under the gross method, again, refer to page 411. Under the gross method, I would debit accounts payable for how much? How much do I owe them at the gross amount?
325,000. Or no?
Oh,
Right, but Catone, didn't we return 50 cases?
Oh, right.
Right, so it would be the 325 minus the 3250. So the amount that I owe them, so the amount that's in accounts payable related to this transaction is 321,750. Because I had credited accounts payable for 325,000 here, and then I debited accounts payable for the 3250. So the amount that's in accounts payable is the 321,750. All right. Now, how much am I going to pay them? Let me go ahead and let's get our cash in here. How much am I going to pay them? So the discount, how did I do that? Remember, our discount is 1%. Oh, I see what I did. Our discount is 1%. So how much would I pay them? Well, what is going to be the amount of my discount? It's going to be the 321,750 times my discount, right? Notice I'm doing cell referencing so that if I change any of these numbers, you know, it would automatically update. Again, just an Excel technique. So the amount of my discount that I would take is 32.18, which is 1% of the 321,750. So the cash is going to be the gross amount that I owe minus the amount of my discount. So I would pay $318,533 for my purchases. Now let's take a look at the impact that it has on the two components of inventory, quantity and cost. Did the discount, oh wait, let's finish the journal entry, sorry. What account would I credit for the amount of the discount?
inventory.
Inventory. When we take a discount, it reduces the cost of my inventory. So when we take a discount, it reduces the cost of my inventory. So when I look up here at the effect on my number of units and my cost, did taking the discount affect the number of units that I have on hand?
No.
No. But did it reduce my cost?
Yes.
Yeah. So my total cost is reduced by the 3218. So total cost is reduced for 3218. Did not affect the number of units I had, but it reduced my cost of the units that I have. So everybody good so far? Okay. Now, on February 4th, we sold 3,500 cases at $150 a case. So I'm going to put here that my sales price was $150 a case. And we sold 3,500 cases, and the terms of the sale were 210 net 30. Now remember, when we record sale of an inventory, we also have to debit cost of goods sold and credit inventory. So we need to know how much we're going to debit cost of goods sold for and credit inventory. So let's first, again, we're using the gross method. So remember the gross method that we learned in sales in chapter 7. We would debit what? What account will we debit? Come on, we're recording a sale. Wake up. We're recording a sale on account. Good. Accounts receivable. Good. And our accounts receivable is how many units did I sell? So how many cases did I sell? I sold 3,500 cases. And I guess I could have put the cost here instead of over here. So my sales price would be the 3,500 times the 150. So my sales were $525,000. And again, we're using the gross method. So I would debit accounts receivable for the $525,000 and credit what? Come on, this is easy, quick.
Sales revenue.
Good, sales revenue. Okay, sales revenue. Now remember, when we sell inventory, we also have to debit cost of goods sold and credit inventory for the cost of the goods that we sold. For the cost of the goods that we sold. You know what? I'm not liking this in my schedule right here, and you'll see why in just a minute. So I'm going to put number of units sold right here, which was 3,500, so that my sales is equal to the 3,500 times the 150, and I get my 525 back. All right, so at the time of my February 4th sale, how many cases did I have on hand? How many cases did we have on hand at the time that I sold the 3,500 cases?
4,950.
Good, 4,950, and at a total cost of how much?
319,083.
Good, at a total cost of $319.83. How much does that give me as my cost per unit?
$64.
Good, the $64.46. Okay, 64.46. Now, why is my cost per unit different than the 65?
Because you have discounts. You have
Good. And what else?
and you receive return.
Right, so I have the discount, and that reduced my cost per unit, and my inventory that increased my cost per unit. Okay, you see how I had the 550 that increased my cost but did not affect the number of units. I have my discount, my purchase discount that I took that did not affect my cost per unit, but did not affect the number of units that I have, but the discount of 3,218 reduces my cost per unit. So my cost per unit is 64.46. How many units did I sell? 3,500. What is my cost per unit? And so the amount of my cost of goods sold is 225,614. 225,614. Okay. When I assigned this as an Excel problem, in calculating this cost of goods sold and the inventory, students would often forget the effect that freight has on your cost per unit, and what taking the discount, the effect that the discount has on your cost per unit. Okay, don't forget that. And that is the reason that I set this table up, was so that we can keep track of the number of units that I have and what my cost is. So is everybody good on that? All right, now on February 10th, my customer paid me for the February 4th sale. So did they pay within the discount period?
Yes.
So yes, it was 6 days and it was 210 net 30. So they're able to take the discount. This is going back to applying what we learned in chapter 7 with how do we record sales with a discount, and the customer takes the discount. So obviously I'm going to debit cash. Let's get our accounts in that we're going to do. I am also going to debit, since we're doing this on the gross method, what account would I debit for the amount of the discount that is taken? You just had an exam on it.
So discount.
Nice job. Sales discount. Sales discount. Because here I am the seller. What kind of an account is sales discount?
Contra revenue.
Good, contra revenue. And then I would credit accounts receivable. Now, what am I going to credit accounts receivable for? What is the balance in accounts receivable for this customer?
$525,000.
Good, 525,000. Now, the amount of the discount that they're able to take is they can take a 2% discount. So the amount of the discount is going to be the 525 times the 2%. So the amount of cash that I would receive would be the 514,500. So this is the gross method. This is the gross method. I'm going to remove the split screen and get y'all out of the way. Well, can't, it pops back up. So these are the journal entries that would be done under the gross method. Under the gross method, we've initially recorded our purchase at gross and our sales at gross. Notice that when we pay the freight, remember your definition of net purchases, that when we pay the freight, inventory is debited. And when we take advantage of a purchase discount, inventory is credited. Inventory is credited. Okay. Gross method. So I'm naming my worksheet gross method. All right, now let's do the net method. I need y'all to go over there, I guess. All right, so now let's do the net method. What I am going to do is, you see I have this worksheet in my workbook, gross method. I am going to net method, and I'm going to copy, and man, I mess this up in Excel all the time, because it used to be that I could just right click on this, and I want to copy edit.
If you highlight and then Control C, you can copy.
Yeah, I could do that. There's another way, copy, and no, that's not going to work. All right, I'm just going to do it. That there's a more efficient way to do it, but I'm just going to do Layton's. Those of you that have a PC, you can just right click on your you can right click and copy it. Okay, so now I'm in, and I'm going to change this to net method, and let's see how the net method impacts our journal entries. So we're going to be recording them net of the discount, net of the discount. So I know that I'm going to debit. Remember, on January 2nd, we purchased.
This room is bigger.
Oh, sure, sorry. So I know on January 2nd, I purchased 5,000 units at $65, which was a total of 325. I'm entitled to a 1% discount. So my inventory is going to be equal to the 325,000 minus the 325,000 times the 1%. Okay, so I just put subtracted the 1% from the 325,000, and we know that the net amount is what we would record the purchases at, gross versus net. So we would debit inventory and credit accounts payable for the net amount. Then we paid the $550 for our freight. And now my cost, let me go back up here to January 2nd. My cost per unit is equal to the $65 minus the 65 times the 1%. So my cost per unit is $64.35. So like this, this changed because I just changed my, so I could do, and the 5,000 times the 64.35 is the 321,750. So does everyone understand where the 64.35 came from? Okay. So my inventory is, okay. Now, my total cost is 321. We have the freight. Again, it's not affecting the number of units, but it is affecting my cost per unit. Now, I returned on January 6th, we returned 50 units. We need to record this at net. We need to record it at net. So the 50 units times the 64.35 gives me 32.18. We have to record it at net. If we go back to gross, remember we did it at 32.50, ended up being the amount that we recorded it at, the gross. But because we're using the net method, I just switched back over to the net method. My 50 units that I returned would be at net. The 64.35 again is the $65 minus the 1% discount because we're recording it at net of the discount. So I would debit accounts payable for the 32.18 and credit inventory for the 32.18. So how are we doing? So let's stop for questions. None?
Why is it 32.18?
Because we're recording this at the net method, meaning that we're recording it net of the discount. Okay, so my cost per unit net of the discount is $64.35. The $65 times 99%. Or minus 1%, however you want to look at it mathematically. okay? When I multiply the 50 times the 6435, which is the net method, the net amount, we get the 3218 that I would record the return at. Now I'm going to pay them. Now I'm going to pay them on January 13th. It was paid within the discount period. So how much am I going to pay them? Well, what's in accounts payable? What's the balance of accounts payable right now?
321.
1,750.
Well, we credited accounts payable for 321,750, but remember I returned 50 cases. So I don't owe them the 321,750 because I had a return to them of 3218. So the amount that I owe them is 318,533. Now let's go to the gross method. Remember this number 318,533 that I'm writing, I credited cash for? Under the gross method, I paid them 318,533 because that's the amount that I owe them. It's just that because I was recording it net of the discount, that I don't have to credit inventory for the discount that I've taken because it was never included in inventory and accounts payable to begin with because I was recording net of the discount. So process this. Does it surprise you that we have the same cash that we're paying? No, because all that we're doing here is just an accounting method choice. Am I using the gross method or the net method? And why do I have a reference here? Oh, I know, because I don't have. So now it is February 4th, and we sold some inventory. Now my inventory, I still have 4,950 units available for sale at a cost of $319,083. I'm going to flip over to the gross method, and it's the same 4,950 units available at $319,083. So it's not surprising that we've got the same numbers because one way we were recording the same economic activity, but at the gross method instead of the net method. So my accounts receivable, we sold 3,500 units at 150 a case, is going to equal my sales number. Now we're doing this at the net method, So my sales number at gross minus how much of a discount did I give them? So I'm using the net method, how much of a discount was I giving my customers?
8,300.
Pardon me? What percent was I giving my customers?
2%.
Good, a 2%. So if I take the 525,000, we're recording it net of the discount. then my sales is 514,500. Again, this is net of the discount. This is net of the discount. My cost of goods sold is going to be the 3,500 cases that I sold times my cost per unit. 225,614. I'm going to go over to the gross method and it's the same number. Because I took advantage of the discount, I paid within the discount period, my cost per unit is $64.46. Now on February 10th, my customers paid me. My customers paid me on February 10th, which was within the discount period. So how much are they going to pay me?
$514.
Right, the 514,500. When we go to the gross method, how much cash did I receive?
The same.
The same, exactly. Okay. Now I want to take the same problem that we just did I want to take the same problem that we just did, but I want to change the date that instead of paying on January 13th, okay, so I'm gonna go into the gross method first. And instead of paying on January 13th, say that I paid oh, is it 10 o'clock already? Okay, we will, is it really into class time?
Yeah.
It is. Okay, so we will do LIFO, FIFO. We will start off with working this problem if they did not pay within the discount period on Thursday. And then we will do LIFO, FIFO, weighted average, and we will also do dollar value LIFO. I will give you some problem. I tell you what, I'm going to ask y'all to work a problem in LIFO and FIFO, and I'm going to have you upload it. Just what I need is more stuff to grade, but I will have you upload it for an in-class quiz grade. You know how I would work problems to do? I will send out an announcement about how I want you getting prepared for class on Thursday. How about that? And I will do what we're going to cover and what I want you to do to prepare for class. Okay, I'm going to stop sharing right now so that you can see my face. So I will put out an announcement on what we will cover on Thursday. We will pick up with, if I did not pay as the buyer, if I did not pay within the discount period, how would that journal entry change under the gross and the net method? And then if my customers did not pay within the discount period, what would that look like under the gross method and the net method? So that is what we will start off Tuesday on. And then we will get into LIFO, FIFO, weighted average, and DVL. If we don't finish, then we'll go into Thursday with finishing 8 and then starting chapter 9. Okay? Because I spent some time doing the SU thing, which I thought was important for y'all to understand that concept. And so I look out for an announcement. I will also have data analytics number 4 graded. And then I think I'm caught up on grading. Okay? Peace out. I will look at the Connect homework that you have due on Tuesday. And if I'm sure it has LIFO and FIFO stuff in it. So I will have that due. I will move that to being due on Wednesday. Okay, so we'll cover it on Tuesday and then have it due on Wednesday. I don't want to have it due on Thursday because I want you moving on. I will post all of this in an announcement on Blackboard, I promise. Okay, but the Connect I will move to being due on Wednesday instead of Tuesday morning since we didn't get as much covered today. Okay, is the sharing the screen okay?
Yeah.
All right, and then I will be uploading the Excel, that we just worked in class. I will upload that into right below where I have the problem. Okay, so I will upload this Excel sheet that we've already done so that you have it over the weekend.
I have a quick question.
Yes, ma'am.
Example that we just did. So you said that you had to either use gross method or net method throughout the entire problem, right?
Correct.
Okay, so why does it say that they use the net method to record purchases and then the other method to record?
Because this was an Excel homework problem where they only had to do they didn't do net and gross for both purchases and sales. So I will change that to be, we'll do it either everything is net method and everything is gross method.
Okay, thank you.
Okay, you're welcome. All righty, so I will see y'all on Tuesday. Look out for announcements from me on getting ready for Tuesday's class. Okay, have a great weekend.
Go on.
Okay. Thank you.
You're welcome. Good seeing y'all.
Thank you.
I didn't send out polling questions, but y'all will live. Bye-bye.